72 days. I think the program is going to have a hard time getting off the ground, especially under Trump administration. We're going to wait years for it otherwise.
We've been speaking with Rachel Fowles. She's the Senior Policy Advisor for Reinvent Albany. We've been talking about congestion pricing and what may happen as Trump is coming into office in January 20th, what the governor might do. Rachel, thanks.
Thank you so much.
Support for WNYC comes from the John S. and James L. Knight Foundation, helping public radio advance journalistic excellence in the digital age. The Knight Foundation believes informed and engaged communities are essential for healthy democracy. More at kf.org. The following message is from the MTA. Riders can tap to pay for their New York City subway and bus rides with their phone, contactless bank card, or get a refillable Omni card. Details at omni.info.
Marketplace Morning Report is next, and later on Morning Edition. In the new film Heretic, two young missionaries knock on the wrong door. Hugh Grant stars as the man who takes them into his home and terrorizes them.
We just need to go home.
I won't keep you if you wish to leave. But I want you to choose which door to go through based on your faith.
What does this have to do with us leaving?
Everything.
Hugh Grant talks about playing a villain next hour on Morning Edition right here on WNYC. 52 and clear right now, sunny and cooler today, a high of 67 and gusty.
Many voters don't feel good about the economy, but one of the most powerful economic policymakers in the country thinks it's going okay and getting better.
Marketplace Morning Report is supported by Bitwarden, a password manager for business designed to help turn end-of-year IT budgets into long-term enterprise security success. Learn more at bitwarden.com.
I'm David Brancaccio. The Federal Reserve cut its short-term interest rate by 0.25 percentage point yesterday. At his briefing, Fed Chair Jerome Powell stayed away from politics despite the freshness of the news of Donald Trump's decisive victory. But many of Trump's proposals could affect the scale and timing of changes to the central bank's interest rate policy. Marketplace's Nancy Marshall-Genzer was at the briefing.
Fed Chair Jerome Powell says he feels good about the current state of the economy.
The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September.
This latest interest rate cut is meant to keep things on track, but some economists say President-elect Trump's plans for tariffs, tax cuts, and an immigration crackdown could reignite inflation or even cause stagflation, where economic growth stalls but inflation and unemployment rise. I asked Powell what he would do if stagflation became a problem.
The whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan.
The Fed's main inflation-fighting tool is interest rates. When prices spike, the central bank tries to cool the economy by raising rates so it's more expensive to borrow and spend. And yesterday, Powell wouldn't rule out a rate hike next year, although he added that's certainly not the plan at this point.
We're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
With all that uncertainty, Powell says what the Fed does next depends on the data on things like unemployment and inflation. Powell says decisions on interest rates will be made meeting by meeting, and the Fed isn't on a preset course. I'm Nancy Marshall-Genzer for Marketplace.
The U.S. bond market is down this morning, pushing the 10-year interest rate up to 4.3%, reversing course. The average 30-year fixed-rate mortgage fell yesterday to below 7% using Mortgage News Daily's calculation. A view now on how European investors are moving money on this tumultuous week in politics and monetary policy. The key stock index in Germany, the DAX, is down about 1.7% since Donald Trump's victory and down about 0.9% this morning so far. Joining us from Frankfurt with profits and trade policy in mind is Joachim Stanzel, chief market analyst for Germany and Austria at CMC Markets. Good morning.
Good morning.
Now, some Republican allies here of Donald Trump have tried to tamp down concern about the president-elect's tariffs promises, suggesting perhaps it's a bargaining position coming from a deal maker. How is it seen in Europe? Are European investors taking the prospect of much higher tariffs seriously?
There is really a lot of uncertainty. We have seen in the first reaction on the first day when the election results came out that car maker stocks were really decisively down. Then there were a lot of renewable energy companies stocks really going down, but they have bounced back a bit at least. So there is some speculation that the German market and also European stocks could be like a catch-up play. We see that there is a clear negative decoupling. The DAX is off of its all-time highs. It hasn't made new all-time highs in the past days, while we have all seen that the Dow Jones and S&P 500 had made new all-time highs. So there is clear respect and doubt that it will be positive in the end for Europe.
Donald Trump's victory this week has also added strength to the dollar, this despite our central bank, the Fed, lowering interest rates yesterday afternoon. That has to be a key calculation when investors are thinking about European profits.
It's really, really interesting how much money has been moved around in the hours after the election results were out. So I think those moves are not something that is going to go away like in the next hours or so. But I rather think that this has been really planned weeks ahead and weeks before. And those and one of the reactions is that the Fed expectations for their interest rate or for the Fed funds rate in the end, that it will be higher in the end under a Trump administration, as has been expected and priced in before, because there are some expectations that tariffs and also tax cuts by Trump are going to be inflationary.
Speaking from Frankfurt, Jochen Stanzel with CMC Markets. Thank you so much.
You're welcome. Thank you.
London's 100 share index is down 0.9% now. Paris is down 0.8%. The German DAX index, checking again, is down 0.8%. Some of that is the political disarray in Berlin, with pressure on Germany's chancellor to call an election soon. Here, S&P futures are down 0.1%. Dow futures are close to unchanged.
Marketplace Morning Report is supported by Schwab. Schwab offers investors choices like full-service wealth management, self-directed investing options, and trading on Think or Swim. More at schwab.com.
President-elect Trump has made his first major appointment, choosing Susie Wiles as White House Chief of Staff. Wiles helped run the campaign and will be the first woman to hold that position. There are a host of other appointments we're waiting for from the president-elect in the coming weeks and months, which would give us a better sense of how the new president plans to meet promises to change oversight of, for instance, financial markets. Marketplace's Nova Safo is here with more.
Well, under the Biden administration, regulatory agencies such as the Federal Trade Commission, headed by Lina Khan, and the Securities and Exchange Commission, headed by Gary Gensler, have been thorns on the sides of Wall Street and Silicon Valley. They've tightened oversight over cryptocurrency firms, big tech, and artificial intelligence, as well as social media companies and financial firms. Now, often chairs of regulatory agencies resign to make way for an incoming administration. But on the campaign trail, President-elect Trump promised to fire Gensler, and he's indicated a desire for more cryptocurrency mining in the U.S. and government actions that would support crypto prices. Under Biden, the FTC's actions have included an attempt to ban non-compete agreements, an effort that is currently stuck in courts, David, and could be abandoned under Trump.
All right, Marketplace's Nova Safo there. Thank you very much. In New York, I'm David Brancaccio. You're listening to the Marketplace Morning Report. From APM, American Public Media.